Today's episode of This Week in Startups is brought to you by Citrix GoToMeeting. Meeting is believing. Visit GotoMeeting.com and use the promo code TWiST to begin your free 30-day trial. And by Walker Corporate Law, a boutique law firm specializing in the representation of entrepreneurs. Visit them at walkercorporatelaw.com. And by AWS Activate, the Amazon Web Services startup program. It's easy to start and scale your business with AWS. Visit aws.amazon.com/activate.
Hey everybody, today a duo of startups in two of the most difficult places to try to innovate. One in finance, FutureAdvisor, and then another, FirstDerm, in healthcare. Two different founders, two different extremely challenging startups. You're going to learn a lot, and you're going to see the future of both personal finance and skincare, rashes, and just app delivery of medicine. It's going to be a great episode. You're going to love it. Stick with us.
That's what it's all about, man. They said money is the root of all evil. Funny how it feeds my people. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah, money is the root of all evil. Funny how it feeds my people. Yeah, we ain't gonna live like equals until we get the money, spend the money, and defeat you.
Hey everybody, welcome to This Week in Startups. It's me, Jason Calacanis. Yes, this is the show where we talk about technology, investing in companies, building products, and just trying to change the world through technology and products and entrepreneurship. Sometimes you fail, sometimes you succeed. Most times these companies are an absolute unmitigated disaster. They crash, they burn, and nothing comes out of it other than learnings and scars. And then those entrepreneurs either quit and go work for big companies, or they come back over and over again until they become part of that 30% that actually succeed and change the world in some small ways, ways. So here on the program, we do this twice a week, Tuesdays and Fridays at 1 p.m. Pacific, and we've been doing it 4 or 5 years. Like 100,000 people download every episode of the show. I don't know who all you people are, but you stop me on the street, you stop me in airports. It gets a little bit weird sometimes. People in a urinal next to me will be like, hey, I love the show. And I'm like, that's great. So instead of making it weird, there's a new rule. Just put your hand up and be like, hey, up top, love the program. You can just give me a high five, that's fine, or a fist bump, just put your fist out, or just scream the name of an episode you love. So any of those things are fine. What's not fine is just being weird and being like, looking at me in the corner of your eye and be like, oh, I think that's Jason from This Week in Startups. Just come up and be like, hey, dude, what's up? On a flight, in a restaurant, love talking to people who watch the program because I do this program for my own intellectual curiosity in a way. Just being able to sit here and talk to interesting founders or interesting investors and find out where the future is, like, to me, that's fascinating. That's why I do it. And if you're listening to the show, you're probably very similar to me. So just come up and say hi. It's weird sometimes. Like if somebody who tweeted on a flight, like, I'm on a flight with Jason. And I was like, yeah, what row are you in? Come say hi. Just be normal. Come say hi. Tell me what episode you like. What guest you like. What guest you want to see on the program. Hey, thanks to my friends at WeWork here in San Francisco. WeWork Golden Gate is where I have my office. And they have offices in New York, San Francisco, Boston, Seattle, yada, yada, yada. Chicago, London, DC, Israel coming. And you go to WeWork.com. They're sold out in most cities, but here in San Francisco, forget it. Hey, today on the program, we have an entrepreneur who's part of the Web 2.0 movement, and his name is Bo Lu, B-O-L-U. That's pretty good. You have 4 characters in your entire name.
Really easy to find my name on lists of students as a kid.
Yeah, it's pretty cool, actually, having a short name like that. Although your handle is gone like every service you go to, right?
Pretty much.
Pretty much you're not going to get Bo Lu as at Bo Lu, right? You're not at B-O-L-U. You are. You got your Twitter handle?
I did, but I don't have
4 character.
But I don't have enough letters in my name for a Gmail address. And
is it 6 min or
6 min? And Bo.Lu doesn't work either because that's 5. I don't have a middle name.
That's true, right?
Straight up weird.
Come up with your own middle name. Be like, call yourself like Steele or Strong.
Yeah.
Bo Steele Lu.
That'll be, I think, as weird as some guy in a urinal fist bumping you while standing next to you.
Yes, exactly. I love the show.
The one time I won't fist bump you is in a urinal next to you.
I haven't got a fist bump in a urinal, but I literally have been in a urinal and like 2 urinals down, the guy's like, hey, I love the show. I'm like, I love doing the show. That's it. It's fine. Anyway, you are the founder and CEO of FutureAdvisor.com. Tell the audience, what is FutureAdvisor?
Co-founder.
Oh, co-founder.
Yes.
Very important because it's a co-founder who's not on the program right now saying, hey, don't forget about me.
So FutureAdvisor delivers one thing, which is the same high-quality portfolio management that wealthy families have enjoyed for decades, but it brings it to the mass middle class in America for the first time, mostly by the power of scalability via software. That's what
Got it. So how does that work? You're a Y Combinator company, is that right?
Mm-hmm.
Yeah. So how do you do that? Because most of these advisors charge 1%, and you have to go to whatever it is, Morgan Stanley, Lance Bernstein, JP Morgan. I don't know what people use as their advisors. But instead of using that, I would go to And so how is it technically different?
So it's actually on the back end. If you peel back the covers and look in the office, not much different, which is one of the interesting things, right? I think one analogy that works well in this space is the TurboTax versus H&R Block analogy, right?
Okay.
If you take H&R Block and you remove the dude, and you just take his chair, that's TurboTax.
Right.
So that's essentially what we're doing. We're removing the dude, and you, the client, take his chair. You're in front of the computer. Let's be honest. Most financial advisors aren't doing this on pencil, right? Like they have software that manages accounts and initiates the trades and does the rebalancing. We put all of that software packaged in a much more user-friendly way and give it to individual mass affluent clients across the country.
Why doesn't this exist as like a single device? Like, can I buy a stock on the stock market that is a balanced portfolio that includes bonds and everything? Wouldn't that be easier? Or like, why doesn't a bank like Bank of America have I can transfer from checking or savings to a balanced portfolio? Like nobody's ever thought of this before? Because I mean, obviously you have the big competitor New Wealth Fund, which was been on the program, and they do something similar. But it seems like there's only these two options now.
So it's actually a good point. If you look at the way this industry has been built, it's been built in layers. So the first layer on the bottom is securities, right? Denizens of the S&P 500, they're the ones that actually drive revenue and shareholder wealth growth over time. And then that was the stockbrokers in the 1950s. You bought GE or you bought AT&T, right?
Right, like a single stock.
Right. Usually, actually, history shows terrible idea.
Right.
Then people said, well, okay, why don't we package them up in instruments? First it was mutual funds, recently it's ETFs. So you buy one share of something that actually contains a sliver of many, many shares of other things. A little bit of a better idea, right?
Right. So the mutual funds was kind of an 80s thing, 90s thing. I remember my mom and dad were like, oh, we'll buy some mutual funds. It'll be a package of stuff. But there was a manager who actively kind of did that. But then they came out with like QQQQ, or I just remember that because it was like an acronym, very easy to remember. But that was just the NASDAQ. So QQQQ, if you type it into a ticker, it comes up. I don't even know who makes that instrument.
There are instruments that package things up. And I think to answer your question, it's kind of interesting to see how banks think and to see how people who are not banks, like us, think, right? So banks think from the bottom. They said, okay, look, we have mutual funds. Maybe we can package some mutual funds together and sell it to people. So we need the funds of funds. And now you're like 3 layers removed from the core underlying value, and every layer takes some fees and still not in any way personalized, right? You are just like the next 200 million guys who have the same mutual fund. And so you'll see the same ups and downs regardless of your individual age or risk tolerance. But what we have done, and I think other companies in our space have done, is said, look, let's come from the top down. I'm a human being. I have access to securities, instruments, but access is great, but what I really want is just this black box where I make money and I spend money and the rest of it's magic. And it turns out if you have a family office, because you have more than $50 million in the US, that's exactly what you have. You have a black box where you make money and you spend money and everything else is magic. But if you're a regular, everyday American consumer,
a civilian,
a plebe, you have these, you have the layers from checking to savings all the way up, including insurance and investments, most of which don't make much sense and have a lot of small print. And let's be honest, most Americans are not very good at math. And so you make all these wrong decisions along the way. And so we come from the top and we say, well, we'll just do it all for you, right? If you think about it, startups solve for a problem. We solve for wealth. People want more wealth? We solve for it. There's an equation for it. We solve for it. What's interesting is the major component of wealth is actually behavior. And so you have all these companies out there like Fitbit who are solving for behavior, but we have something that no nutrition, health company has, which is we can separate you from the thing you want. Imagine if Fitbit could just take your body, Jason,
right,
and exercise it for you, give it great nutrition, and give it back to you when it's 65, healthy
and just be
and
like,
buff.
here's your body.
There you go. Congratulations.
Perfect,
Healthy and buff. And you didn't do anything.
Right.
That's what you can do with financial services, which you can't do with anything else.
And the behavior issue is mainly that people are their own worst enemies when it comes to investing. Explain that. I mean, I think most people know this, but the market goes down and people panic and sell when it's going down.
No. Speaking to someone who's seen both waves of the tech revolution, there's a great quote. If you don't quote me the numbers here, but it's something like if you invested $1 in the NASDAQ in 1999 and you removed your dollar in 2002, you had $1.02 or $1.10 or something.
Yeah.
It was fine.
Right.
But nonetheless, we as a nation lost, $1 trillion, some ludicrous number of money.
Yeah.
Because as it went up, people kept piling in. And as it went down, people kept piling out.
Yeah.
And so if all you had done was put your dollar in, someone knocked you out cold, you woke up 3 years later, there was no tech panic. Everything's fine. You're like, I'll get $1.10. What's the problem?
Right.
But it's because you were alive and reading the news and doing weird gyrations in the middle that led to the wealth destruction of the second to last bubble. So.
Right. Yeah, people will sell on the way down because they're panicking, and then it comes up, and then they're the last ones to know, and then they buy or whatever. So just leaving it in there. So now, how do you know the asset mix? Because here, we can pull up on my screen like the target portfolio.
Yep.
There's all kinds of portfolio theory out there. Like, is there some school of thought, like, I don't know, Harvard or somebody, Stanford came up with, this is what a balanced portfolio should be, or how does that work?
There's actually a lot of good academic evidence out there with respect to how a retail investor should behave. And by and large, it actually agrees with itself. Right? It's very internally consistent. So it's actually exactly what you see up there. There have been books written. One of the best ones is David Swenson, who runs the Yale Endowment, who wrote a book called Unconventional Success that if you read it will actually look a lot like this. Because what the academics believe is mostly generally accepted, which is stock bond split and inside stocks, inside bonds diversification, all in such a way that matches your time horizon and your risk tolerance, and that's it. So in terms of the thing we deliver, it's extraordinarily similar to the things at a high level, to the things that a good financial advisor would deliver. It just so happens that two things, that we are able to do so for half the cost or less, and most importantly, we are able to do so for clients who've never had access to true good human financial advisors before. I mean, this is actually kind of the reason the company started, is because nobody wanted to serve people until they already had lots of money, in which case you're like, what's the point, right? Like,
it's kind of a catch-22. All right, when we get back from the important break, tell me sort of what it's like to start a company in the financial space and then raise money for it, because obviously it's a lot more complicated than just starting an app to deliver food. When we get back on This Week in Startups. Yes, Citrix GoToMeeting. I love GoToMeeting. Citrix GoToMeeting is a wonderful product. I use it literally all day long. I love to do demos. So I always tell people, show, don't tell. So when I'm looking at companies that I'm thinking about investing, I just respond, hey, let's set up a GoToMeeting. The GoToMeetings in my calendar, I open up GoToMeeting first thing in the morning, or it's running on my laptop, and I just click my meetings. It's got a list of all my meetings. Boom, we get people in the meeting, and they can call in on the phone, they call from their cell phone, they can do VoIP, voice over IP, they can do HD faces, beautiful HD that looks like you paid for one of those $250,000 teleconferencing sessions. And then, I don't even have to look at the notes because I know every feature. You can record the call if you want to have the call for notes later. You can switch who the presenter is, boom, boom, boom. I can make you the presenter and I control your keyboard and mouse if I want to go through your deck and I want to move it forward. I don't do that. That's kind of obnoxious, but I could. But I don't. And then, this is the most important part. You want meetings to start on time, and you want the software to be stable, and you want it to work on every platform. And that's what happens with GoToMeeting. I cannot tell you. Sometimes people invite me to some free service or this and that, and nobody gets on the call. And we spend 20 or 30 minutes trying to get people on their cell phones, and the call never starts, and then the time ends. Time is money. Time is precious. GoToMeeting keeps me on time, keeps me on schedule, and really helps me get through my day. And I do so many meetings with GoToMeeting. I love the product. Go to their website, GoToMeeting.com, and click on the Try It Free button and use the promo code TWiST. And this is one of the great things in my life. I do this show and I get great people on the show, but I also have great partners and sponsors who I actually use their products. We call it whitelisted advertising. We only allow people on the program if we actually use and love their products. And boy, do I love GoToMeeting and use it constantly. And all my companies use it. I have multiple accounts because I don't want them having access some other, like we have 3 or 4 accounts here because different people have different meetings on it. I don't want them to see my meeting and drop in. So I have my own personal one, then I have one for Inside, I have one for Launch. It all works flawlessly. Go to GoToMeeting.com, click the Try It Free button, use the promo code TWiST. Very important for you to use the promo code TWiST when you try it for free so they know that, hey, This Week in Startups fans are going to go and support the people who support the program. Thank you at Citrix at GoToMeeting. Go ahead and follow at Citrix. Go ahead and follow at GoToMeeting and thank at GoToMeeting on your Twitter handle. Let's get back to this amazing episode. Hey everybody, welcome back to This Week in Startups. It's me, Jason Calacanis. You can follow me on Twitter at Jason, and you can follow the show at TWI Startups or thisweekinstartups.com. You can subscribe in iTunes or whatever your favorite podcast player is. On the program today, Bo Liu, who is the co-founder and CEO of FutureAdvisor, which is aiming to bring financial services like balancing your portfolio and having a fancy blended portfolio, but doing it, I guess, for much lower fees. Is that how much do I pay? Do I just pay you a flat rate every month, or do I just give you because I know the big fees are like 1%, right? Like
it's between
a big advisor.
Yeah, it's between 1% and 1.5% generally. You pay us 0.5% annually on the assets that we manage. And actually, if you look at the statistics, most Americans who don't have an advisor are paying something like 79 to 92 basis points in terms of fees just for their mutual funds and ETFs. But since our fees are 50 bips and we put you into very low cost ETFs that average something like 18 bips, you can actually go from where you are today as an average American to having it and doing it yourself to having it managed for you for cheaper overall.
Right. Because if you were going to buy these ETFs, you might be more. So what ETFs do you buy and how do you pick those? So if you're buying, what is it like
There's a bunch of Vanguard ones, a bunch of iShares ones. Yeah. So technology is all about commoditization, right? And what's interesting is that at the ETF layer, the commoditization is happening right now. Like, Vanguard has an S&P 500 ETF, and BlackRock's iShares is an S&P 500 ETF, and Schwab has an S&P 500 ETF. They are the exact same, right? And so for us, it really comes down to what does the client already own? We're very personalized. If you already have one, we're not going to jam in the other one. It makes no sense.
Right.
Where are you? If you're at Schwab, why are you the Schwab one? Because it's actually cheaper and trades and the trades,
So are all those people who are doing the ETFs like in a race to the bottom in terms of how many bips, percentages of a percentage point they charge?
Yes, especially on the index ETFs market. And this is one of the interesting things that's happening in the ecosystem because, you and I, we're in startups. We see this all the time, right? Where value always kind of accrues to the person closest to the customer, right? And so in investment advisory, it used to accrue to the broker in 50 years ago, but because he was the only person between the customer and the share of AT&T. And now it then accrued to companies like Schwab and Fidelity and Vanguard, who was the broker-dealer layer between, and sometimes in the mutual fund company layer, between the core drivers of value and the customer. But now it's starting to accrue to our layer, which is the registered investment advisory layer, and we're the last layer to the customer, right?
And how do I set it? Because here I see, I pick my age and my retirement, conservative, moderate, aggressive. Does it matter what people pick there, or in terms of conservative, moderate, or aggressive?
It does. It matters a little bit. The thing that most matters is your time horizon. So if you have a lot of time, you can sit through a couple of cycles. If you don't have a lot of time, you don't have that luxury. And so that's the thing that mostly modulates the portfolio. In terms of the risk tolerance, it's how bad a cycle can you sit through psychologically. That's really just a way for the software to understand the human, right? If you took it to extreme case, in a weird alternate reality, we just knock you out for 40 years. And you wouldn't have to pick that one anymore because we just do the right thing for you because you wouldn't freak out in the middle, right? Humans are still their own worst enemy.
Right. So if the stock market crashes this summer because of whatever's going on in the Ukraine or in Gaza.
Yeah.
The best thing historically has been to just sit tight and ride it out, which is exactly what happened in the financial crisis in 2008. The stock market got cut in half, and now it's come back and then some.
And then some, right? And to diligently invest and rebalance throughout the entire time.
Yeah. Now, what's important about rebalancing, and how does that occur?
So rebalance. Let's talk high level. What is rebalancing? What is it a part of? Right? Because mental models are the thing we use to make sense of the world. The thing. We were talking actually a second ago about looking inside your portfolio for most Americans. It's kind of like opening the hood of your car. There are like a bunch of pieces. You know what any of those do, but they're there. Okay, great.
Yeah.
Right. And you don't care whether it's what component, what brand oil filter you have is totally transparent to you.
Yeah.
So if you think of it that way, rebalancing is just a component of the items in the hood under the hood of your car, which is it keeps everything else in check by making sure that over time your portfolio continues to reflect what it should look like even as markets change and different asset classes grow at different rates. Portfolios that are not rebalanced, which are the vast majority of American portfolios, humans don't do it. Only good advisors do it, and software doesn't. Tend to come out of whack eventually, which now this is like geek moment, because stocks tend to have higher long-term returns than bonds. They tend to dominate the portfolio over time. And so as people are getting older and they should be ratcheting down their risk, it's actually ratcheting up their risk. So that's not great.
Yeah, because the bonds get paid back or whatever, and they sort of emerge. So were you a financial advisor before this? And how did you get into this? And I mean, because starting a startup where you actually are not just bringing people lunch like Sprig or Spoon Rocket are. The cost
life
of
savings.
You have their life savings, not their lunch.
Yeah.
So, how do you? What's your background that qualifies you to do this, and/or what did you have to do to? Be worthy of taking people's money, because you've taken how much money now? How much is under management?
About $200 million.
$200 million.
Yeah.
So you have $200 million in accounts. Like in a startup, that's kind of a big deal. It's not like that's a lot of salmon.
Good question.
Yeah.
So do you have a moment for a little bit of personal story?
Sure. Why not?
Okay. So I'm an immigrant. Came to the U.S. at the age of 7. My parents are electrical engineering professors who grew up in a society from China. China in the 80s was a place where you didn't have to invest because the state took care of you more or less.
Yeah.
And they made $12 US a month as electrical engineering professors. So
where? What city?
Shandong.
Shandong?
Shandong is the province of Shandong in a city called Suzhou, which is the home of the China Institute of Mining Technology where my parents taught.
Got it.
So
they're making $12 a month teaching.
Everything's free though. You're making $12 a month.
Yeah.
I seem to remember my grandmother telling me that cabbage translated into US dollars was sub 1 penny per kilo, right? Like it's a very different economy, right? Okay, anyway, so they come to the US. They're super poor. They have like maybe a couple hundred US to their name, having saved for decades. So I watched my family go from poor to a little bit wealthier, having established their financial footing in the U.S. But when they did so, they're savers, and so they said, "I'm going to, we're going to invest in our future. We're going to invest in our children's future." But they bought the only thing they knew about, which was tech stocks. And we got here in 1990, and that was about 1998. You can see how the story ended up.
So they bought tech stocks.
Yeah. So they bought tech stocks. And so I watched my family go from poor to less poor to poor again. And that was the epiphany moment when I realized this is a thing. You have to be good at this to succeed financially in the U.S. And so I was that geeky kid who opened an IRA when he was 16 and did it all myself and read all the books. So first, that start. And then college, CS. I started out in my first big company tech job. And all my friends had money for the first time. And they could not they could not figure out an IRA to save their life. Mostly not because they were dumb. They're super smart kids. They just didn't care enough, right? Like it's a thing. Like my parents keep telling me I should do, I'll get to it eventually. So eventually they kept coming to me for help, and I said, look, I seem to remember a lesson as a little kid that my parents told me to separate friends from money. So you guys, I hear this thing called financial advisors. You go find some and figure it out.
Yeah.
So they would all come back to me and say, look, I found some great financial advisors. They'll have $500,000 minimums. I get $8,000.
What do I do?
Yeah. But the best part was one or two would be like, I found this one guy. He'd take me, but he had some life insurance. I'm like 22. What do I? I don't get. I mean, they're really smart enough to figure out the life insurance thing wasn't for them. It was for the advisor, right? So that's the problem. And then I sat down, because no one helped them, I sat down and helped every friend. And if they teach you nothing in CS school, it's that don't repeat yourself. And like all I was doing was I was the repeat monkey. I was like, all right, here we go, diversification. Let's look at fees. Let's look at overall tax impact. And after the fourth time, I was like, this is a total waste of my time. Right. And so FutureAdvisor started initially as a software tool so that I wouldn't have to be the repeating monkey to tell my friends what I was going to have to tell them anyway. So that's how the software started. In order to, so now let's talk about the company as a registered financial advisor. If you go to the SEC website, you'll see our name and see all of our regulatory filings. So there is regulatory overhead.
So you just figured all that out when you were at Y Combinator or something?
A combination of figuring that out and having great legal counsel, including folks who have worked with us in compliance and now our chief compliance officer. This is a thing, right? Like there are thousands of financial advisory shops in the country, some big, some small, and there is a well-known legal framework for it, and so you just execute, dot your I's, and cross your T's.
And when did you graduate from Y Combinator? When did that?
2010, I think.
Oh wow! So you were really early.
Yeah, this was. We were
very early, and then Sequoia invested a whole bunch, or multiple times. They did your A and your B.
Yes. And part of the seed.
And who was? You did a C round too.
And sorry, part of the seed. As well.
The seed. Yeah. And so. Who's on the board from Sequoia?
We work with Warren Hogarth.
Oh, okay, cool. Yeah. And so $200 million under advisement.
That's under direct management. So that's
under direct management.
Every morning the algorithm wakes up and moves that money as necessary by itself.
And what do the big companies think of you now? Like, are you even on their radar?
It's interesting because the answer is absolutely yes. There's a major brokerage that I won't name that had me fly in and talk to their senior leadership in their annual offsite. And the thing is, I've never seen an industry where it's become so apparent to every player that this is the future.
Yeah.
It's like there's no disagreement here. Like nobody's out there waving the flag saying, oh, it's never going to work. Nobody's going to trust software. Like the flags that used to be waved about disruptive companies are not being waved because people realize that this is how it's going to work. There's no way that regular Americans will go another 50 years doing it themselves, even though none of them want to. And there's no way that the current financial service, the current investment advisory ecosystem that is very human-based and very sales-based is going to scale down to the mass mid-market.
Yeah, it's obvious. I mean, I have Wealthfront and I have it on my phone and I can pull it up and see all of my stuff. Why would and I had an advisor who was, Lance Bernstein was a wonderful guy, nice relationship, but I actually like Uber. I don't really want to talk to anybody. Yeah. I actually don't want to talk to anybody. That's what it comes down to. I just want to have a simple, clean service. So that's
the interesting thing, right? Like great startups are built when a founder realizes, and I think in our case, multiple founders at the same time, realizes something that they believe that the rest of the world doesn't yet believe. Yeah. And the thing that we believe is that most Americans don't wake up in the morning and say, I really want to spend an hour with my financial advisor. Yeah. Like that is an edge, right? That is an edge case. Like I'm only there because something broke.
And people trust software now, right? So it's just not like a big thing. All right, listen, continued success. Thanks so much, Bo Liu, for coming on the program. Everybody go check out FutureAdvisor.com, FutureAdvisor.com. I'm a very big fan of the space. I think it's I think everybody should be doing this. It's just so obvious. And you can follow him on the Twitter at Bolu, B-O-L-U. And stick around. We'll be right back. Yes, Scott Walker is a good friend of mine, and he runs the Walker Corporate Law Group. They are a boutique law firm that specializes in the representation of entrepreneurs. He has chosen in his life to make his mission to help entrepreneurs and founders, just like I have. And he does it so well. He's got a team of people with decades of experience at the big firms. And he gives flat rate pricing for things like mergers and acquisitions and forming your company and licensing agreements, terms of service, privacy policies, all those things. Fixed fees will let you sleep well at night knowing that you're not going to get slammed with some ridiculously huge bill. I see Scott at all the events I do. He's constantly sitting there talking with young entrepreneurs, older entrepreneurs, just helping them, get through these complicated legal issues deftly and easily. Go to walkercorporatelaw.com, walkercorporatelaw.com, or give him a call directly, 415-979-9998, 415-979-9998. And you can email him, Scott at Walker Corporate Law, Scott at Walker Corporate Law. He's a really great guy, and he's got a great team, and they really help startups. They're not going to crush you with bills. They do that fixed rate thing, but they also just care, and that's what you're really looking for in a partner, and you really need to have a great attorney when you're going to build a great company, because there's a lot of issues that are going to come up, and I highly recommend you call Scott Walker, 415-979-9998. Thanks, Scott, and thanks to your team for helping all the startups who listen to This Week in Startups. Let's get back to this amazing episode. All right, welcome back to This Week in Startups. It's me, your host, Jason Calacanis. You can follow me on Twitter at Jason, and the show at TWI Startups. All right, next up, another entrepreneur doing something super interesting with skin. He's got skin in the game, so to speak. Alexander Borve. You have an app that takes care of something which is very embarrassing for people in some cases. What is it?
So basically what we have, I'm a orthopedic surgeon, so I'm a doctor.
You're a doctor.
In background. And what we...
I could tell from the jacket, by the way. The blazer, that sort of clued me in that you're actually a doctor.
Yeah, we usually have a bit of attitude.
Yes,
yeah.
I can see that, yes.
So the app is basically on skin diseases. So any kind of skin disease that you have, you can take a photo of that, send it in to us, and then we have dermatologists that look at it and send you back an answer what it can be, how you can treat it, or if you should go and see the doctor within 24 hours.
Wow. So show us this. So, and this is like a great idea. It's a single-use app. Mm-hmm. And as a doctor, when people get a rash, let's say on their private parts, they might be embarrassed, like a young person or even an older person. And this is anonymous or not?
Yes. So it's completely anonymous.
Completely anonymous.
This is typical. Also, journalists, they like to focus on under the belt. But to tell you the truth, there's only 25 to 30% which are under the belt.
Okay.
The majority are actually
not your genitals.
Not your genitals, but proper rashes, young mothers that send in off their children.
Right.
Or older people who think they have skin cancer who send in. Yeah.
Okay. So how does it work?
So how it works, you just download the app. The app is free to download.
What's the name of this app?
FirstDerm.
FirstDerm, as in dermatology, DERM for those people. So FirstDerm.
Yep.
And you can see it, by the way, at, is it firstderm.com?
FirstDerm.com, yeah.
Okay, so go to firstderm.com, you see it. Okay, go ahead.
Yep.
So and can we pull up his phone?
Yeah.
Yep. Okay,
and then you download the app. And
it's I see it there.
And then you just open it.
You open it. 70% of cases can be treated with over-the-counter remedies. Oh, you got your little walkthrough here?
Exactly. Okay. And there's no email, there's no account, there's no Facebook, there's nothing.
You don't log in?
No.
Because you know my phone. My phone has an ID.
We don't know your phone.
You don't know my phone.
No.
But you do know that I have the app, and there's some app ID, so you can send the information right back to me.
No. That's what I'm going to show you.
Okay, show me how this works.
Right? So you just open up the app, and if you don't want to go through the ID, you just go right into taking a photo.
Okay.
Right? So here you can either take a photo of your skin.
Right.
See here? We can retake it.
Go ahead. There's that little dot. You see that little dot?
Yeah.
What is that little dot, Doc? Because I've had that for a while.
Oh, my God.
That's literally, I did that on purpose because I have a little dot there.
Are you sure we should send this in?
Yeah, let's send it in, see what happens.
And then we should have an overview picture.
I've had it there for a while. It's a mole. I've had it for decades. But yeah, go ahead.
Has it grown or anything like that?
Not maybe in the last 10 years, a little bit.
So we'll have a closer look on that.
You want to take a closer?
Yeah,
let me get
close up.
You see it right there, right? That little dot.
There.
That little tiny dot right by my knuckle.
So that was not very
Not good. You got to retake that. Let's get focused here. You see it right there, the little black one. Now, that was given to me on Krypton when I received my superpowers.
So this is what I should write in here,
so
describing it. Is it, so you're male? How many weeks?
43,
months? Years?
Yeah, 43 weeks old. 43 years old. Okay, and the symptoms are nothing. Just a little black dot.
Right.
Little growth.
So how long you had it for?
20 years.
20 years. So you just had it for years. And what was it? You Krypton? Is that what you got?
No, I was joking that it was like my superpower. It was given to me on Krypton. Go ahead.
But has it grown or anything like that?
No.
Not grown. Had it for a long time. Not itching. No?
No. No. I get a little OCD about it.
So no change.
No change, yeah.
Okay.
I do rub it sometimes. I get like a little OCD and I have that little...
How many inches, millimeters is it?
Wow. Well, I mean, it's not even an inch. It's like, it looks like a seed. It looks like it's a sesame seed.
Right. So it's like
The size of a seed.
3 millimeters. So then you're from San Francisco, right?
Yeah.
So San Francisco and then United States.
Got it.
And then you just go next.
Boom. Look, and you got 2 photos of it. Good.
Whoa. We had an overview and a close-up.
Great.
And then we just go, we accept the terms and conditions.
Right. Pay and submit my case.
Pay and submit your case.
Now what, you put your credit card in? You've already got your credit card in?
Well, you already have your iTunes account, right?
Oh.
So you want an answer within 24 hours, right?
24 hours, yeah.
So here, what do you want to pay with? In-app,
In-app.
iTunes, PayPal, or Bitcoin?
I would like to pay with Stellars. You don't take Stellars yet. Okay,
so
I'll take in-app.
we can do in-app.
Sure.
So then I just press in-app.
Wow. And now Apple is cool with you doing this? Like, did Apple is okay with taking $40 for a medical service?
Yeah.
Yeah, that's interesting.
I mean, they take 30% of the cut.
Yeah, so they're making $12. And that is so much better than going to a doctor and paying my $40 copay and paying $20 to park, because they're always in those medical centers where they kill you on the parking, or just taking an hour out of my life and to wait in the waiting room to meet with a doctor for 5 minutes. No offense, but we're talking about the United States here, not Stockholm.
Right. So one thing is important to realize is that this app, it's not as good as going to the dermatologist.
Of course
so we're
not,
not substituting the dermatologist, but we're like in between doing a Google search and actually going to the dermatologist, right?
So a doctor will look at this, and then what happens?
So the doctor will look at it. Within 24 hours, you'll then receive a response in the app of what it is, how you can treat it, or if you should go and see the doctor.
Now, what level of certainty would you have? Because I could see a doctor, at least here in the United States, they're so CYA, cover your anatomy, that they would want to give me information like, well, it could be this, but you should really see a doctor. It's always like that same goddamn disclaimer. So are they going to tell me like straight, like, yeah, it's a growth or it could be cancer or whatever? Like, how honest and upfront are they going to be?
So it depends what kind of rashes or issues that you send in. So our dermatologist, for example, if you look at skin cancer, it's quite difficult, but they will see that, well, this is suspicious. You should actually go and see the dermatologist and have that verified. Rashes like eczema or like acne or, fungi or even Lyme disease, they can see quite clearly what it is. So it depends a little bit on what kind of skin diseases you're talking about.
And is this because the cameras are so good right now? Do they like on their side blow it up on their desktop and they're able to see like finally what's going on?
Exactly.
So they do blow it up.
Yep.
And is that how doctors... does camera technology come into play with dermatology? Like, do you actually take a picture of something and blow it up so you can see what kind of flakiness or gunkiness is going on?
So, for example, in medical school, how we learned dermatology in a lot of cases, we looked at Kodak pictures, right? Or images. That's how we learned dermatology. So, dermatology is a very image-based service. However, there are issues that are very difficult to diagnose, and there you have to do a biopsy. And that is in true life as well. If you actually go to dermatologist, they cannot always tell what it is. They would actually take a biopsy.
And here, just so you know, producer Jackie decided that she would test this. And she tested it, and she took a Google image of a baby with eczema, and she uploaded it. I'm showing it here on the web. And she got this answer. So she put it up and got an answer. And we found a photo of a baby with eczema, and you guys said possibly nummular dermatitis, a type of eczema with coin-shaped red and slightly scaly skin lesions with prettious/itch, but other diagnoses can be considered, such as fungal infection. For example, it is caused by dry skin. Moisturizing cream and topical steroid would be recommended. Usually mild steroid creams such as hydrocortisone 1% are sold over the counter, applied twice daily for a week to start with. There may be secondary. So you're giving people a pretty good...
It's an excellent answer. And for example, that difficult word that you couldn't pronounce there at the beginning, if you Google that keyword, you will get a really defined like Mayo Clinic or Cleveland Clinic who've actually gone through it, and you have a much comprehensive answer than going to WebMD, for example.
Let me ask you a stupid question. If you learn from images. And you're studying this image, and computers can study images, and computer imaging technology works. Why can't I just take a picture of my body and what I have and have the computer tell me?
It's a very good question. And we've been looking into it. So we need to have 1 million pictures that we look at. We have to have standardized pictures every single time. So you know when you've been on vacation, for example, when you were in Italy on vacation.
Yes.
What kind of holiday snaps did you take? Were they in focus every single time?
Sometimes I do a blur technique. Sometimes I apply a filter or whatever. Right. So if you're doing photos for your health, you probably don't want to put on the 1973 filter.
Exactly.
Or else they're going to come back and tell you like...
Yeah, or they have to be focused every single time. So if we want a computer to learn this, to teach computers algorithms, they have to have standardized image every single time.
So a computer could take a first shot at it, and then a human could look at it and say, I think the computer got it right or wrong.
Yeah.
Because if we literally took every single patient who came to a dermatologist, and as they left, we knew that they had this specific skin rash because we biopsied it and actually found out, and we took pictures of every single one, the machine would eventually do it as well as a human. Right? It could not.
Yeah, and that's what I'm saying. We have to have that standardized images every single time of that.
Is it because humans don't want to trust a computer to tell them their diagnosis, do you think?
It's not so much like that. But, for example, there are algorithms with skin cancer, for example. And there they put the sensitivity very high and specificity very high. That means just to be on the safe side, there will be a lot of false positives, right?
So, yeah, if it could be cancer, you're going to want to get a biopsy just in case.
Exactly.
So you did this, and this is all done in the United States with U.S. doctors? Who's actually doing this? Are you sending these to like India, to like doctors in India that are sitting in front of monitors getting hundreds of pictures a day, like an outsource situation, or what is it?
So, for example, the app, we have it in 6 languages.
6 languages.
Yeah, so we have it in English, we have Spanish, French, Italian, Swedish, and Chinese now. So obviously we use doctors who know how to speak these languages. So we have US doctors, UK doctors, Spanish, Italian, Swedish, and Chinese doctors.
So you just recruit those doctors like one-on-one and say, hey, we're going to send you a picture every now and again, and they just take out their phone like an Uber driver? And
yeah, that's right. But the ones that we recruit, they're vetted by us. So we go through their credentials, and then we do like a social media and things like that, look at them, and then they do a test. So they have a 20 image test that they have to answer. And if they don't answer that adequately, they're not allowed to join the team. So they're all vetted. And also 20% of all our queries that come in every month are audited by an external dermatologist. So we like keep it like a high level service.
I was about to say, like, wouldn't it be wise to do a double blind every time where 2 doctors look at every single one and then you get both results back? That's what I would like. But I guess it would open up for you liability perhaps. But I always like to go, when I have a serious situation going on, I'll go to one doctor and then I'll go to the other, but I won't tell them I went to each other. And like I had I was having back pain. I took my x-ray. I asked the guy, can I get the x-ray? I took it to another chiropractor, right? And I showed it to the chiropractor. And I said, hey, what's going on with this? And he said, oh, you see here, you have this curve. And he starts drawing on all the issues I have. And I was like, chiropractors, quackery. I bring it back to a real doctor like NYU. And I show him the drawings and everything. He's like, you have a perfectly normal spine. You are 10 pounds overweight. You're 40 years old playing basketball like a 19-year-old. You may need to ice and you may need to do this, but there's nothing fundamentally wrong with your spine. I'm like, it's not curve wrong here. He's like, no, here's a textbook. He literally took out a textbook. Here's your textbook spine. Here's your spine. It's textbook. I was like, well, the chiropractor told me this. He's like, chiropractor. They're not even doctors. Like, you just dismissed them.
So, I mean, if you want a second opinion, I mean, why don't you send in the question twice? You pay $40 every single time?
Well, would it be sure that there were 2 different doctors, or maybe go to the same?
You can ask for that.
So that would be very interesting to do a double blind. Has anybody failed the test when you try to bring them on the team?
Oh, yeah.
Really?
Oh, yeah.
Wow, that's interesting. So there are bad doctors in the world.
But they're not being bad, but they're not doing what we tell them to do. So, for example, if you send in a picture, they say, hey, it's very difficult for that little information that you have here to tell me anything. right? So we train our doctors to answer in a particular way.
Got it.
And doctors that don't want to be trained and answer in a particular way, they can't continue working for us.
Right.
Right.
Now, you've been doing this for how long?
So we've done this the company started back in 2008 as a research and development company. It's obvious, well, if you're going to try and sell something into healthcare, to sell this to a hospital in, let's say, LA or San Francisco, the first thing the administrators or the doctors will ask about is, where's the evidence for this? So since 2008, we've been collecting images, and all these images that we've been collecting and also set up studies in hospital settings, we've done research on this and can show the efficacy and the value of using a service like this.
Got it. Now, where does this go from here? Like, and do you have like dozens of people using this a day, hundreds of people using it a day, or is it just like a small side business? How big is this?
So we're growing now 25% every month of
good.
cases coming in. And our users are, more people downloading the app. We haven't done any advertisement on anything like Google Ads or Facebook.
So there's hundreds of people using it a month? Thousands? What?
Thousands a month.
Thousands of people a month. So it's a real business.
Yeah.
So what's next? I mean, if you can do this for dermatology, what if I have a cold? Can I make a short video of myself, look down my throat, turn the camera light on? I mean, is there other things you could do? Because that's, to me, augmenting this. I really love your idea of like, there's something between going to the doctor and going to Wikipedia or WebMD or whatever it is. And for example, I know that when I get sick, I get these colds once a year or whatever. If I get that Z-Pack or whatever, it works like 9 times out of 10. It just kills everything and I'm good. And so when I was in France, I had that happen. And that you could buy a Z-Pack just by walking into a pharmacy. You didn't even get a prescription. Are there other things you can do along the way here and that you're planning to do?
So, I'm a great fan of your show, and I've seen a lot of your programs. And there's one thing that you tell the entrepreneurs.
You're a man of discerning taste, by the way. I just want to point that out.
Focus. Keep focused. Laser sharp focus. And be good at what you're doing. When you're good at what you're doing, and you know how to do it, you're the best there, then you can start doing other things. Okay,
so you feel like you have a little ways to go on the skin. You can still, iterate on this.
I mean,
more cities to go to, more languages.
I mean, this is a $56 billion market, right?
Really?
Yeah.
All those skin creams, all that itchy skin.
Exactly. And there's a 4-week waiting time to go to the dermatologist.
Ouch.
And in Africa, there's one dermatologist per 8 million people.
Wow. Wait, 1 per 8 million?
Yeah.
So if you were to bring this to Africa, you would essentially be bringing the first dermatologist to 7.999 million Africans.
Yeah. So what
That's extraordinary when you think about it.
Yeah, it's huge.
Well, just and not to be like a rabid capitalist, but sometimes I am a bit of a rabid capitalist. I'm just thinking, my God, what an amazing market. Maybe they don't have as much to spend, but boy, that's a lot of customers. And certainly they would pay $1 to get something taken care of, and a doctor could take care of this super quick, right? And so it would be better to train. I'm just trying to think about, I don't know anything about all the laws in the different African countries, but wouldn't it be better if they had no dermatologist, for them to just have a highly trained specialist who learned about dermatology, which is to say, how long would it take you to train somebody to give 99% of the answer that a doctor would give?
So, I mean, our dermatologists, they practice at least 10 years before they start doing this.
Right.
And then they did 1 year in medical school. Our vision there a little bit, we looked into Africa. We've been there 2 years to have a look. We're not making any money there because they don't have $40 to spend. And the dermatologists who we've actually engaged in Africa, they think this is very interesting. What we see is that what we could actually do, we can train a lot of these African medical students to become experts in dermatology and use your own resources. If you look at entrepreneurship in Africa, the best people are the ones that figure out something that for society there's a benefit. Like, biggest problem in Africa is electricity.
Yeah.
Right? You don't have electricity for phones. But then there were some guys that invented this dynamo. Everyone has a bicycle.
Yep.
A dynamo is what you put on your bike. And you have these kids now going by bike 20 hours a day charging the whole villages.
People just take
phone
turns. It's like that's the gym.
Exactly.
And everybody just goes and works out on the bikes.
And that's where I see here as an entrepreneur and also giving something back. Social entrepreneurship is the best. It's not that we're going to take these African patients or something like that, but we're going to teach them how to look at these images and train them. And then all of a sudden, they have an economic system that they can look at these African pictures and get paid.
Actually, I'm just thinking if there were no laws and regulations, right? So it's like an interesting, we added all these laws and regulations to the United States and around the world in different locations to protect people. But obviously there's a group of people who are not getting any benefits, so they don't need any protection necessarily. Any solution would be more than no solution. I wonder if you made a game out of it where 5 or 10 people could look at the same photo and do their own analysis based on what they learned, and if the majority would actually over time get it right. So if we train 10 people who, let's say, were nurses or just college graduates, in aggregate, would they get it right?
Yep.
And would that be more valuable than nothing?
Which is a very good comment. We see that about 80% of those images that come into our system, they're 20 different diagnoses. So the same image comes in again. It's like, ingrown hair, it's eczema, it's some kind of some kind of fungi, the usual kind of things, right?
Yeah.
So it's quite easy for the dermatologist to get it right if you're trained.
So you keep doing dermatology for a bit. What's the next category, though? Let's assume you get this, really, locked in over the next couple of years. What would be the next category that you think you could deliver app-based medicine, if I'm going to come up with a term? App medicine.
App medicine. So, there's other markets. So we want to do we want to be like the Johnson & Johnson or Novartis of, pharmaceuticals. They have different portfolios of different pills, right? This one's for headaches, this one's for stomach aches, this one's for this rash. So we want to have a portfolio of apps. This one's for skin, this one's for diabetes, this one's for psychiatry, this one is for headaches.
And there is some for psychiatry now. People are delivering that virtually. Yeah.
So then when we grow quickly enough and have enough funding, we will then acquire other companies. Exactly the same philosophy that Facebook or Google have, instead of building all their own stuff.
Yeah, you could buy some verticals.
Buy some.
So what do you think of, have you seen Better? I've subscribed to Better. I'm going to have them on the program at some point. But I have this personal health assistant where I can I pay $50 a month and I needed to get a certain pill, Meslaclean. It's basically an anti-nausea pill because I get sick on boats and planes sometimes. And I was going to be on the water. And so I was able to just say I needed this. They talked to my primary care doctor, and the prescription is magically at my pharmacy. I don't have to go. What do you think of that? Like the sort of personal health assistant and Better type services?
That's great. As long as you know what you have and what you need, then that's how it should be. And obviously, you know that in 3 or 4 years' time, you're a little bit advanced, so you do everything by the smartphone anyway. Right. But to get that critical mass, it's 3 or 4 years down the road before everyone starts using their smartphone to get access to their doctor. So
it would be really, I think, when you think about these apps, like Secret has gotten a lot of flack, and obviously FormSpring before it, and Juicy Campus for anonymity in relation to like just spreading rumors or having conversations or a message board. But really, health is where anonymity can super play a great role. What I love about your app is you don't have to log in. So if you have some rash or something and you're like, oh my God, I'm too embarrassed, you don't have to be embarrassed.
So this is a little bit about our motto. Is what you say, your health, health is nothing that you want to share on Facebook, right? What you want to share on Facebook is, hey,
your best self.
I've been to the Bahamas. I'm drinking a pina colada. I'm here on top of Pisa in Italy. You know, you want to show those. You don't want to show, hey, I got a rash between my crotch. You know, anyone can help me.
No.
You know, you don't do that. So this is where we come into play. We completely turn around. We also think about this NSA and what's going on there. Everyone's scraping, collecting data. So we turn the place completely around that you should be anonymous. Mm-hmm. You should do exactly what you want to do using our app, and we don't collect any information. However, there's a price to that, which is $25 if you want to have an answer within 48 hours or $40 if you want to have an answer within 24 hours. However, the price to know peace of mind, how much is that worth?
It would be really, you know what I think would be, just riffing on your idea, I wonder if, can an adult take their own blood easily? And if I could take my own blood and send it into a lab anonymously, that would be an amazing, amazing innovation. Does that exist in the world? That you could take your own blood as a individual, or would that be too difficult to do?
I mean, you can always prick your blood. That's what you do with diabetes, right?
Yeah, you prick your blood. Yeah. I was talking more like, I wonder if I could...
Like a big needle like this?
Well, not a huge one, but it would be very interesting. I'm just thinking, like, if somebody wanted to take a test for STDs or HIV or whatever it is, you know, some people might have a stigma about that, and they might actually be willing to draw their own blood in order to avoid going to a doctor and get those results.
You know,
maybe the next logical step.
I understand what you're saying, but I still think that this patient-doctor relationship is very important. So, you know, if you're going to go into HIV or hepatitis, stuff like that, it's good to have someone to talk to.
Well, you could after you find out, but I'm just thinking there's so many people who don't actually, for fear of what might happen or embarrassment or whatever it is, or convenience perhaps even, they don't actually take care of themselves. I would really like to be able to take my blood and every quarter of my life have a blood test done just to know? Just to know, like, what's going on in my body. I wish there was some regular service like that.
It's quite interesting you bring this up. I mean, we in the hospital, we don't take blood tests indiscriminately because individuals are all different. All of a sudden, you have a data point, which says that your inflammation is high. Does that mean we should go and search for that data point in your body, or are you just born like that? It's your genes that express that high blood pressure, right?
So you're opening up Pandora's box sometimes.
That's
when you take
you're doing,
blood,
right? So that's what you should be very careful of doing. All these MRIs indiscriminately, because you can always find a little dark spot. Ooh, what's that? Right?
That's what happened to me. I had hurt my leg playing, again, back to basketball. I hurt my leg playing basketball. Somebody landed on it. It sort of went like on my knee. I go, they do an MRI of my knee. They're like, oh, yeah, look, your meniscus is torn. Then I open me up. I wake up. They're like, hey, Jason, wake up. I'm like, great. He's like, I got some good news for you. I was like, what's that? He's like, your meniscus wasn't torn. I was like, what? He's like, yeah, these MRIs, they're not always perfect. And we went in there. The meniscus is fine. There was just a little detritus around there. We cleaned it up. We put it back. And like to this day, I get like a little bit of fluid in my knee. Like, I don't know what's going on.
How much did you pay for that?
My insurance probably paid $5,000 or something.
Yeah,
$6,000.
So it's a good way to earn money.
And that's exactly what I said. That's what the cynic in me said. It was like, oh, wow. When in doubt, cut them open.
So this is a little bit what I'm trying to do with this technology. Give it in the hands of the consumer, you.
Yeah.
You choose what you want to do with it, right? And in 70% of the cases, you can go to the pharmacy and treat yourself. Yeah. However, 30% of the cases, you actually have something more severe, and we tell you to go to the doctor. So we get the patient in at the right time to the right level of healthcare, which is the only way we can save money.
I bet you that if people could just buy their own drugs and stuff like that, like literally all this over-the-counter stuff, I bet you if you made all the stuff that people have to get a prescription for, anybody could just buy it. Nobody would buy it and take it if they didn't need it. Very rarely. Like some weird people would take certain things because they want to get high or something. But I bet you people would be healthier in aggregate. I bet you they would go do the right thing with their health. And they'd probably do it more often. All right, anyway, listen, I can talk about health forever, Alexander. This is a great product. Everybody check out FirstDerm.com. Congratulations on making something truly innovative. And they haven't tried to shut you down.
Why should they shut me down?
I don't know. Just like delivering medicine, it just feels like you're just giving advice, I guess. But
so you're looking at someone that's probably saved over 100 lives using this kind of technology.
Really?
Yeah. I don't know if you had anyone like that on your show.
You saved 100 lives. Oh, because there's some things that could be fatal?
So, for example, we had over 150 possible malignant melanomas that we sent in through our system.
Wow.
Yeah. So we told them all to go to the doctor and get it checked out, get it biopsied.
Wow.
And some of them have come back to us and said we were completely right, that we actually saved their life.
Holy jeez.
There's one guy,
awesome.
he was so happy that he actually called the doctor who had looked at the image to tell him. He said, look, I want to come to you.
Wow.
And
he bought you the jacket?
No, he didn't buy me a jacket, but he went there. And he had surgery within 48 hours from getting information from us.
Alexander, that is awesome. And for those people who don't know, I'm just joking about Alexander's jacket. He's wearing a jacket that is best described as like, I think the last time I saw that jacket was in an MTV video in 1980 with, what's that guy, Robert Palmer, like Addicted to Love or something?
MTV, they still exist?
It still exists, yeah, I think it does. Listen, Alexander Borve, thank you so much for being on the program. Everybody go check out FirstDerm.com, especially if something on your body is itchy or got fungus or other junk going on in your body, man. Take a picture, $20, $40, get it worked out. And we're going to find out what's going on with my thing. I bet you they're going to tell me to go get this biopsied, right? I had it looked at, and the guy was just like, yeah, no, it's just nothing. All right. Thanks again, WeWork. Thanks to our partners, and we'll see you next time on This Week in Startups. Bye-bye.